All right, friends, we're back with another DeFi weekly. So we usually do it once a week, but wasn't feeling so well last week. So this we'll have two this week. So one at the beginning of the week, one at the end of the week. So that's just as good or twice as good. And the name of this one is Invisible Bullishness, and we'll talk about why that is in a few minutes. So what we're going to cover is, of course, like usual, the state of the market. So what are prices doing? Which everybody should know, but maybe you don't know. Which assets have been moving the most and moving like in terms of biggest gains and biggest losses. What the on-chain data is telling us in terms of one key, I would say, on-chain metric, as well as the ETF flows. What the market structure is telling us, and sort of what are some of the big things that happened in the last week in crypto and DeFi more broadly. Then we'll talk about, as usual, state of DeFi. So what are yields doing? What are borrow rates doing? Um, some new things that are in DeFi. And then one thing or a couple things that this week is just me. So what I would be going long on and what I'd be going short on. And then how we like to close it off, a gift and an ask. So giving you guys something as well as a brief ask from us. So first, state of the market, blue chip asset prices are um, pretty much range bound as we've been seeing for about a month or a couple months now. But BTC and Solana holding up the best, and ETH really sort of underperforming everything else. I saw a tweet the other day um, where somebody was saying that um, if you had held S&P 500 index, you would have earned 22% year to date, with a relatively low volatility. And if you had held ETH to year to date, you would earn 16%, and which is significantly lower than just the S&P 500, and with significantly more volatility. So, and the person was making the point on a risk adjusted basis, like you would be fired if you were working at a hedge fund or something like that. So yeah, ETH really underperforming. I'm not sure why, actually. One of the things that I'll share later is a person talking about ETH who's quite deep in the ETH community, but I think has a quite objective view on things. So yeah, we'll see what that is about. Yeah, big question around ETH, I would say, which is a nice segue into another sort of blue chip price, which is the ETH BTC price. And I think it's a tale of two cities here in a way, because it's either it looks like we're kind of approaching sort of generational bottoms, a generational bottom for ETH BTC, and it's just going to sort of stay there and be dead, or this is the bottom and we're going to bounce. So it's interesting. It's an interesting question. But yeah, it's approaching all time lows. Not all time lows, but it's getting there for ETH BTC. So yeah, big question marks there for ETH. So state of the market, the biggest movers. Not much going on here, in my opinion. The last couple of weeks, we saw some things that were a lot more interesting in terms of tokens that I think more people are familiar with moving up and down. The biggest gainers and biggest losers, but a couple do stand out here. So Shapeshift is a project by Eric Voorhees, I believe, from back in the day. And so, yeah, it's interesting. Has moved up quite a bit. I'm not sure why that is. Might be worth investigating. The OLAS token, I know, is an AI agent project. So that has moved up quite a bit, both on relatively low amounts of volume. So, yeah, I'm not sure why those two have moved up so much, but it might be worth investigating what happened there and if it's worth following the trend. On the biggest loser side, it looks like a lot of them are meme coins, which is great to see. In my opinion, that means that nature is healing a bit. Yeah, also looks like Puffer, which I know is a restaking token. So I'm not sure what happened with Puffer. So it might be worth looking into that as well. Maybe it's a good buying opportunity, or maybe worth dumping further. So this is probably my favorite metric to look at of everything, I would say, which is the MVRV. So I don't think we've done a good job in the past really explaining what it is. So really, all it is it compares the market value to the realized value. So basically, trying to say, hey, is the market toppy, or is it sort of feeling more bottomed out? Now, of course, this is not a exact science, so it's not going to tell you exact tops or exact bottoms, but it will give a general gauge of like where the market is at. So generally speaking, MVRV above 6 is like we're getting overheated, and MVRV below 1 is looking at a good place to really a good place to start really be buying. Probably even anything below 2, which is where we're at right now. So yeah, that to me says, hey, if we're in a regime where the market trend is going up, and we know that that correlation is quite high between interest rates and the sort of macro picture and the price of crypto assets. So the wind is at our back, so to speak, and the price is, or this MVRV number metric is looking pretty good. Like it's looking like, hey, we're not overheated. The momentum is really not super in the market, so this is probably the place and time to be allocating. Which I might need to take my own advice there, but this is not financial advice. So yeah, cool. So then the sort of other piece of market structure here is the ETF flows, which is can't go without seeing now, or go without like analyzing or having that as top of mind. So when it came to Bitcoin, we see that ETF flows are starting to come back a little bit after a first, an exuberant, maybe that's a too big of a word or too intense of a word for what happened earlier in the announcement, early in the year. But you can see that flows are starting to come back in a substantial way. So it's better to just sort of click on this. We can see that, the flows are really starting to come back. We had on Friday, I believe, a $200 million day, then another $200 million day, then a bit of an outflow, $300 million day, $230 million day. So the flows are certainly coming in. By a lot of different people, generally speaking. BlackRock, a big one, of course. So yeah, that is great to see. That's probably one of the reasons why BTC is outperforming ETH. And it's a big question. I wonder if will BTC be the asset this cycle? Even though there's a big sort of wealth effect that happens in crypto assets, will the wealth sort of flow to ETH or other assets? So yeah, it's a big question. It's a very interesting question. Now, we don't see the same thing for ETH, unfortunately. And I'm not really sure why that is. I was listening to a podcast, which I'm going to share later as my sort of give, that was talking about ETH doesn't really have a North Star and a vision and a sort of clear narrative, which I think I really agree with. Though sort of price begets narrative begets price is what I really, really believe in. So I think if the price starts to go up, we will, as a community, as a market, sort of coalesce on a narrative to grab onto. So yeah, this is taking just a minute to run here. But in the meantime, we can look at the screenshot, which is this just kind of paltry flows. Like the flows for ETH are just not coming in when it comes to the ETF. So that could be for a bunch of different factors. But yeah, we'll have to see what happens. Let's see. Did this? Not quite yet. I think that's fine. I think everybody gets the picture in that regard. So yeah, let's go back and talk about some of the other parts of the market structure. So funding is of course something great to look at. So This is just a snapshot of the funding picture uh, of all the large cap assets. So as you can see, we're not underheated, we're not overheated. Similar to the MVRV score, just kind of like not a. It's a fine place to be taking out debt, I guess you could say, or multiplying. If that's what you're into, basically. It doesn't seem like we're in a super overheated market to be multiplying up your BTC or your ETH, which of course you can do on Summer, which we'll talk about a little bit later. Now, moving on to market narratives, I think one of the big ones of this past week was the $1 billion acquisition of Bridge from Stripe, which I see is a typo here, Stipe. But so I think it might be interesting to just first talk about what Bridge is. So Bridge is basically a platform that helps any business use stablecoins to move money around, as opposed to Swift, I guess, which has a lot of barriers and stuff to international people using US dollars. And this is like, in my opinion, this is where we start to talk about this notion of invisible bullishness. Over the time of DeFi, we have, and crypto generally, we've always been searching for a use case, basically, which is the video I'm going to click here. But Stripe is obviously a business that has found product market fit, is well beyond that stage of product market fit, and is somewhat validating the entire space of crypto as something that is going to be very important, or in a lot of ways already is very important in the sort of global tech landscape, for various reasons, which we'll also get into. But this is quite bullish to me. This is like, wow, we're really making progress in terms of the real use cases, the real utility of these technical tools, and also these sort of products that we're creating, on chain, which is sometimes hard to see, honestly. So this is a link to the announcement, and if you want, you can go check it out. This is from Bridge's Twitter. But the key thing for me is just like accelerating the adoption and utility of tokenized dollars, moving them, storing them, spending them, for everyone around the world. That to me is pretty amazing, especially when we think about, from our perspective, Summer, it's like, well, being able to earn with your tokenized dollars, for example, that's just really, really, really great. Bringing more people into the ecosystem is is God's work, honestly. So that's great. So cool. I think the notion of DeFi is very much obviously aligned with the notion of breaking down barriers, keeping it open for everybody, making it global, and just like a more like a financial system that's like up with the times, basically, and not living in the past. And so I think that is really awesome when it comes to the invisible bullishness, as I would say. We don't see it in the price today, for example, but things like this happening are just insanely bullish for the adoption and usage of crypto over time. Now, stablecoins, keep that in mind, because one thing that was really amazing, I thought, was the A16Z crypto state of crypto report. So just type that in, I guess. And it's worth reading. It's worth going through. We're going to go through the things that I think are most important. But it is definitely very much worth reading if you have the chance. So the main things that I want to touch on here are, they talk about a few key takeaways that I think are, again, invisibly bullish. First, that crypto activity and usage is basically at an all-time high. And when you juxtapose that with internet usage, which obviously the most valuable companies in the world today are internet and tech companies, Facebook, Google, Amazon, Apple, I think, Microsoft, these are all internet and tech enabled businesses that have, at first had the adoption where the value was not captured. it was created, but of course later on the value was captured, and I think probably that is probably the same for the tokens that are in crypto today. So yeah, that's really bullish in my view. Then the next thing that I thought was really interesting was the sort of the mobile wallet use in sort of in countries that that are more global. So outside of the West or the North America specifically, which is, you know, Nigeria, India, Argentina, where mobile wallets are really growing, mostly due to stablecoins. And that to me is also really bullish. And I think it's interesting to think about from, yeah, many different perspectives. The other thing I thought was interesting from their report here was that there are a lot of crypto users, but only a few of them, or a relatively small percentage of them, are actually active on chain. And yeah, I think when it comes to, for example, Summer, of course, I'm biased there, but you know, when we have a protocol that will be coming out shortly that you can farm with Race today. But the simplicity and ease of use of that protocol that will be coming out is, for example, like just going to make it so much easier for people like this to want to do things on chain, which is, yeah, just really reducing that barrier to entry, which I think was another very interesting or useful statistic from this A16Z report. So other stuff that I thought was also fascinating had a lot to do with stablecoins. So the political or I guess political and game theoretic in a way from the US's perspective to have stablecoin adoption, as it strengthens the US dollar's position in their view, because of how much I think treasuries are held by these stablecoin issuers versus versus international holders of treasuries. I think is basically the position that they're trying to make, which makes sense. I think that's cool. Yeah, you know, stablecoin issuers are a top 20 holder of US debt, whereas you can see China and Japan are very large, the largest holders of US debt, and I think that perhaps this is a more decentralized approach, or game theoretic optimal approach to have, you know, stablecoin issuers as big holders as opposed to nation states. So then going back to stablecoins, again, reiterating what the Stripe chief product officer was saying about stablecoins. Like, yeah, stablecoins have really found product market fit, and that's another thing that I'm pretty excited about with Summer. And the Summer protocol is, you know, it will be stablecoin focused. So that's pretty great. So yeah, I'm not going to go through all of this, but it is definitely worth checking out. The website is 16crypto.com, and I'm sure it'll be easy to find from there. So one other thing within that I thought was really cool was just how much money that DAO treasuries have. They themselves have almost $1 billion in stablecoins, and a lot of BTC and a lot of ETH. So that's pretty interesting. Now let's start to make it pretty practical. So in terms of what's going on in DeFi, what's the state of DeFi? So looking at DeFi yields, not too much change in the sort of DeFi yield landscape. So all of AV3 deposits for USDT are about 3.5% right now, which is fairly low. That is below the quote unquote risk-free rate of the DSR, and also below the quote unquote risk-free rate of USDS, which is, I believe, 6.25%. And then we also see that SUSDE from Athena is picking up quite a bit as well. From 2 weeks ago. So 2 weeks ago was about half that. I think it was 7%. So yeah, being able to access that kind of yield is on chain is also great. Though with the new Summer protocol, you won't have to be choosing between the two. You'll get access to all the best yields, which is great. It's coming pretty soon, so you should stay tuned. You should stay tuned for that. Now for ETH, what do we have? I think obviously probably have a lot less to expect, but yeah, with ETH, let's see. What do we have here? Yeah, the staking rate, of course, which is a little bit lower than usual. It's rare that it's under 3%. So yeah, 2.82% on staked ETH, and I always talk about it, but I'll talk about it again here, which is that 2% staking yield is low. And you can do much, 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 much better than that. And, I'm going to talk about it until the cows come home. But on Summer, you can easily do yield loops with ETH, and you can do much better than that. So, let's say even just Spark. Well, Spark is a great protocol, but not just Spark, but Spark, Morpho, Aave, you can do better than double. I guess more than 3 times actually. So more than 3x the staking rate by doing a yield loop strategy. So that's awesome. And in Summer, it's one click to get it done. So that's great. Yeah, I think that's great. So then when it comes to borrow rates, how are we doing with borrow rates? So this is just really easy to see on Summer. And to basically borrow against your ETH, it's around 5%. So it's been around 5% for a long time, at least a few months. So that's pretty great. I think if you need liquidity or if you want to multiply or something like that, I think 5%, especially when you can get a collateral asset that has a embedded yield, that's just awesome. So yeah, around 5% to borrow in DeFi today. All right, so let's keep it moving. So new stuff in DeFi. There's not too many new things last week. One that sort of popped out was the fixed rate borrow by Delve, which used to be Element, I think. Oh yeah, formerly Element. So that is basically being able to borrow against, I think just first it's SUSDE and USDE markets, where yeah, you'll be able to do that and get a fixed rate, but also have exposure or access to the variable rate. So if it is below the fixed rate, you'll be able to just get that rate instead. Although I must say the experience is a little bit strange. Like you have to go to Morpho first to open a position to come back to see the app. I think that's a bit weird. But other than that, yeah, that's probably one of the newer things. It's been tried many times before, a fixed rate borrowing. So I think their approach is a little bit different. So it should be interesting to see what happens there. Okay. Now, what else do we have here? So the second last thing here is long short. So I'll start with the short stuff. I'd be short meme coins at the moment. I think meme coins are a bit of a joke, which I guess is the idea. But yeah, I'm not bullish on meme coins. And then the long thing is, I've said it a couple times, I'd say I'm probably bullish on MKR. So this is Rune's tweet here, which is probably one of the bigger things that happened last week, which was just talking about USDS. And this top part is probably not worth reading, but the big part is, maybe going back to the Maker brand instead of Sky. So I think that that would probably be great. Maker, I used to work at Maker, and I remember that, yeah, people would always talk about Maker and how is the like one of the best things happening in DeFi and stuff. And there's a lot of brand equity, I think, with Maker and MKR, and I think it's probably smart to stick with that. So yeah, I think for that reason, I'm still bullish on MKR, so I'd be long that. Now, very last thing is the sort of state of DeFi. So gift and the ask, I guess. So gift, one new DeFi or crypto show that I found. So Gwart is obviously maybe not obviously, a fairly popular Twitter account. In DeFi for shit posting amongst other things, and yeah, he has a podcast or a YouTube channel, I guess, and it's really good. It's like really substantive conversations. I would start with the Ethereum's North Star one probably, and yeah, they're all really good. Great guests, great conversations, pretty in depth, and he's one of those podcast hosts that I think like ask the questions that I would want, like I would ask myself if I was talking to the person. So that's great. And then the ask, I would say, is given everything that's happening, I think right now, I would say to check out Multiply. Investigate it, look into it. I think, yeah, if you hold ETH or BTC, I think, yeah, it is very much worth checking out Multiply on Summer. There's just so much that you can do, so many automations that you can add to your position, and I think, in my opinion, it's the best place to multiply in DeFi by a significant margin. So yeah, check it out, and that's basically it for the DeFi Weekly this week. Invisible bullishness. So yeah, thank you, and see you next week.